Hi, my name is Kamal Hakim and I will start the presentation with the introduction of insurance. What is insurance? Insurance is the best risk management instrument for shielding people and businesses from financial risk brought on by a variety of scenarios. The cash loss can at least covered by insurance, but the emotional and psychological loss will never be made up. Even though there are some uncertainties in life that you can't control, insurance will clearly assist you shift the financial risk involved.
Hi and Assalamualaikum. My name is Mrta binti Muhammad Hairudin and I'll be presenting about the definition of Mrta and Mlta. Mortgage Reducing Term Assurance (MRTA) and Mortgage Level Term Assurance (MLTA) are the two forms of mortgage life insurance offered in Malaysia. Nevertheless, the MRTA and MLTA are frequently misinterpreted. What is MRTA? MRTA is a life insurance policy with a declining sum insured over time which only used to repay your bank or house loan. This plan is typically supplied by the bank which you obtain your mortgage, since it serves as a protection for the bank in the event of catastrophes that prevent you from servicing the debt. However, MLTA is a little modification of MRTA and offers a solution for a borrower searching for life insurance, provide coverage, protection as well as assess and in certain policies returns on the premium. This is a personal protection plan that you obtain independently through an insurance broker or agency. You and your family are financially covered if you die or lose your capability to earn money. Importance of MRTA and MLTA. MRTA, borrowers are increasingly taking out this insurance in conjunction with a mortgage loan for a multitude of reasons, including: first, it is most efficient because it is usually included as an option with the loan. Next, some creditors enable you to add the cost of insurance to your loan amount. Some lenders also offers the lowest loan rates if the user purchases an MRTA policy from them. Lastly, the concept behind MRTA is as your loan balance falls over time, so should your sum assured. Saving your money on premiums, this sort of insurance has a lower payment than MLTA. As for the MLTA is more similar to typical life insurance plans in nature. It covers the borrower from death or TPD and provides an option for 36 critical illness. The sum guaranteed does not decline with time. Borrowers also can decide to increase their coverage beyond death and TPD. Borrowers also can choose for a saving function in which a percentage of their premium payments accrue as the cash surrender value. That's all from me and thank you.
Assalamualaikum, my name is binti Shamudin. Now I'm going to talk about insurance coverage. Death and total permanent disability are covered under MRTA and MLTA insurance. This insurance will pay off the borrower's outstanding real estate obligation, often known as the mortgage, if the borrower is unable to do the repayment. Furthermore, MLTA offers stronger protection because the insured amount remains constant throughout the length of the loan, even if the borrower's balance with the bank decreases over time. This suggests that an MLTA function as a kind of saving in addition to offering mortgage protection and has a defined monetary value that is guaranteed to remain the same during the term of agreement. Now I'm going to talk about who should take the MRTA insurance. Firstly, the homeowner. MRTA provides effective and affordable security to the house owner and their loved ones because buying a home is a big financial investment that typically takes the average homeowner up to 35 years to repay in full. Second, people who apply for house loan. It is because people who apply for a mortgage loan with the hopes that the MRTA will help them pay it back in the event of an unforeseen circumstance, which is when the homeowner are no longer around to finish pay. Third, buyers are targeting home in the long run because MRTA can be equivalent to the entire term of their mortgage loan. And last but not least, it is appropriate for those who have enough standalone life and medical insurance and do not have many financial dependents because in general, MRTA is a life insurance plan with a declining sum over time. Next, who should take the MLTA insurance? Firstly, home buyers should get this insurance since they need to protect their investment even if they are unable to make their payments because of unanticipated circumstance. By paying off the outstanding mortgage on the property, this mortgage guarantees that the borrower's loved one is debt-free. Second, people who apply home loan should take this insurance plan because the loved one will not only obtain their house debt-free, but they will also get the lump sum to help them get by a difficult in life. Thirdly, MLTA offers the borrower safety and saving. If the borrower needs life insurance, MLTA is one of the coverage on life insurance. And last but not least, people with several dependents who can afford the higher premiums debt and would like to provide their loved one with some cash in the event of an unfortunate circumstance can choose this insurance plan.
Assalamualaikum, my name is Mrta and today I'm going to present about example or current issue about MRTA and MLTA. The issue about MRTA is the protest at 5 CIMB branches over house cleaning workers being auctioned off. PSM Deputy President S.R. Chalvan, who attended the protest in Kuala Lumpur, claimed that Tamil Selvi's house in Ipoh was auctioned off by CIMB Bank in October 2020 for 140,000 after allegedly failing to repay his housing loan on a monthly basis while he repaid his loan every month for 15 years. And in 2019, her husband had a stroke. They also once asked for a portion of their payments to be made through MRTA, but they were told that their documents could not be found in the bank system. At the same time, Tamil Selvi was told not to make further payments for the house in February 2021 after informing the bank's branch 5 days after her husband's death. CIMB Bank was found guilty of giving advice and PSM called on their bank to repurchase the house to return it to Tamil Selvi. For MLTA, similar to MRTA, except that it guarantees a consistent payment over time and pays out to both your outstanding house loan and your designated beneficiary. Example, a 28-year-old Malaysian took out a 450,000 ringgit housing loan with a tenure of 30 years and interest rate of 6% for a property costing 500,000 ringgit. He only needs to fork out a one-time payment of 11,695 ringgit and 50 cents to secure an MRTA insurance policy. There is also lower cash outlay on your part as MRTA can be bundled together with your mortgage. On the other hand, if you acquire an MLTA insurance policy, you need to pay insurance premiums of 357 ringgit and 30 cents per month or 4,081 ringgit and 50 cents per annum. Over the 30-year tenure of the mortgage, the premiums will total 122,445 ringgit. That's all from me. Thank you.
What I can conclude after all this explanation, I can say that both MRTA and MLTA are good insurance because both insurance have advantages and disadvantages. The important is, before deciding to buy the insurance, the borrower needs to choose and decide wisely which one is better and suitable for the borrower. The choice of insurance that would best meet the demand of their loved ones in the worst case situation may be made by carefully examining the many coverage alternatives provided. This insurance might be a helpful financial safety net in tough times, even if it is not a legally required part of the house loan deal.
Hi, Assalamualaikum. My name is Putri Nurain and I will explain about recommendation, MRTA or MLTA. Which should I choose? The answer is, it depends on your situation. If you don't have many dependents relying on you financially, then applying for an MRTA is more advisable. But if you have a large family and you are supporting them financially, it's better to subscribe to an MLTA policy due to the consistent and higher insurance payout. MRTA is also more preferable for those buying a home for long-term occupation. This is because it's not easy to transfer the insurance just in case you sell your house. On the other hand, MLTA can be easily transferred, making it ideal for investment properties. But among the key considerations is whether you will have enough budget to pay the premiums for an MLTA policy throughout the life of the loan. If you think you will struggle to service those monthly or annual premiums, it's better to stick with an MRTA insurance.
So beautiful.